Pursuant to Internal Revenue Service guidance, be advised that any federal tax advice contained in this program is not intended to be used, and it cannot be used by any person or entity for the purpose of avoiding any tax penalties that may be imposed by the Internal Revenue Service or any other U.S. federal taxing authority or agency, or promoting, marketing, or recommending to another party any transaction or matter addressed in this show. The opinions expressed by the host and the guests are their own and may not be used as authoritative advice. Any use of this material without the written consent of the host is strictly prohibited.
Welcome back. I am your host, Attorney Stephen Leahy, and this is the IRS Radio Hour on AM 560, The Answer.
Well, Steve, this week, this is our segment where we talk about your blog and what's on the blog. What's on the blog this week?
This week, I wrote an article about the IRS Tax Gap. Now, we've talked a little bit about this on the show.
I remember saying, I'm very impressed that it's, 84% to compliance without anybody doing anything.
Actually, Jim, I believe the correct figure is 83.7%.
Well, I'm rounding it up.
That's without doing anything. That's
just the natural.
I think we mentioned here on the show that this year, 2014, they've collected more tax revenue than ever before in the history of our country.
Mm-hmm. And they keep complaining that they don't have enough.
So the tax gap,
as we just heard,
they never have enough, right?
That's right.
And
your fair share.
And so that's right, my fair share. That's right. That's correct. And the fair share is kind of a misnomer, I think, because when does it become not a fair share? When is it too much?
I believe if you follow the rules and you pay what you're supposed to pay, that's your fair share.
I agree with that, but that's, of course, this is all precedented on the fact that we want to change the rules.
Well, I
think he can change these tax rules all by himself. Jim doesn't need the Congress.
Well, as we've seen before, they can come in and just rule by fiat that's right. These rules have now changed.
Well, and again, we were talking about this last week because the IRS promulgates so many rules to interpret different statutes that are passed by Congress. And sometimes the interpretation is just opposite of what Congress wanted. So one of the, we talked about last week is the IRS interpretation of what we do. Last week we were talking about the IRS and the interpretation.
Well, remember FATCA? We talked about that.
FATCA, and they interpreted that.
Last week they were warning people about taking money. They were going after people's. I forget. Well, I'm not exactly sure, but I remember the FATCA thing, and the EPA does the same thing, and all these organizations have so many rules that nobody can follow or read that they just by fiat say, well. This is
I know what it had to do with. It had to do with Obamacare.
Oh, that's right. Oh, that's right. The big last week they ruled against Obamacare.
That's right.
And of course that has a huge deal to do with the IRS
because the IRS is the one.
And we're on the IRS Radio Hour.
That's right. And
wow.
And so what all of the listeners should take is that the IRS has so much to do with every aspect of your life. Not a good thing. I don't think that's a good thing.
Like I said last week, if I remember correctly, are these the people you working on your health care?
That's right. So let's talk a little bit more about the tax gap, because the tax gap is defined is the amount of tax liability faced by taxpayers that is not paid on time. So most of that is an estimate. So they estimate, what should we have received, and then what did we receive? Mm-hmm. And so that's the tax gap. So as we mentioned, that the people voluntarily pay, they file and they pay.
Now, to me, I think that 84% or 83.7% is a great number. But I guess it's the IRS I look at it as the glass being half full. They look at it as the glass being half empty because they don't think they want 100%. Yeah,
16% empty.
They want it like an old Iraqi election where you get 100% of the vote for Saddam Hussein. I got 100% of the vote.
Okay, so the IRS divides the tax gap into three different components, and one is what they call a non-filing tax gap. So those people who don't file. Under-reporting.
Those are children. Those damn kids.
Well, they don't have anything.
They won't be getting away with this for long.
They don't have anything to take from them yet, so they don't really care about them. Actually, we're trying to give them things. We want to give them things. Take from you, give to them. That's what they want, okay?
Unless they're rich kids. Then they got to pay their fair share.
And then there's under-reporting, and then there's underpayment. So, you've been seeing a lot of these changes in the rules, IRS rules again, about how much more documentation they're asking for. So now,
well, how much easier it is for them to follow you? I mean, for everything,
and that's all what it's about.
Age.
Because the highest percentage that they collect has to do with third-party reporting. So if I work for a company and they're taking my money out of my paycheck and they give me a W-2 at the end of the year, well, that compliance rate is almost 100%.
Well, yeah, because they got you.
They know how much you made.
It's like you said last week. The guy comes to your door. The revenue officer, the revenuer, comes right to your door.
So this last year, another rule that they promulgated, the new rule was when you buy and sell stocks now, your stockbroker has to tell the IRS what the basis is, and the basis is what you bought it for. So so you can't make up a number. I bought it for $10 and I sold it for $12 when you actually bought it for $6 and sold it for $12, because the tax would be a lot different. And again, what the IRS is trying to do is take any of your discretion about how you can report things away from you.
Listen, ladies and gentlemen, what we don't advocate people not paying their taxes.
No.
As a matter of fact, we think everybody should pay exactly what you owe. But what's bothering us and what we try to point out to you here is that this is a bureaucracy gone run amok. They just do what they want to do whenever they want to do it, and then they have nobody to answer to.
Well, we talked a little. I said 83.7% of all people comply voluntarily to all of those three different components. So they report how they pay as much as they owe. They file on time. And everything's great, 83.7% of the time. Now, add that enforcement and late payments. Sometimes people pay late. That number goes to 86.3%. So almost 80. 87%. So that's 13% of the people are having a problem. And again, remember, this is all estimates. So they estimate how much, because they don't know how much people aren't paying.
And it doesn't mean that people are hiding it. Some people are having trouble. Some people are in financial trouble.
Well,
and yes,
whereas our former defense secretary said he doesn't know. I don't know. I don't know if I got it right or not.
And that's scary because, of course, then they can. But again,
it goes back to 13% of the money they don't collect, and so the rest of us have to be under their thumb. And in order and be controlled.
And look at we just showed you how they treat people for not doing this. They call you names. There's nothing anybody's doing against the law here, but they get there and they do this shame thing like they did with the Koch brothers or whatever. You get out on the floor and you start. Well, people don't want to go through this.
Okay, so we were talking about so I think this is impressive. I think 87%, 86.3%, that's impressive. That says Americans they understand they have to pay taxes and they're going to do the right thing. They're going to do what they're supposed to do, and they do it. So to me, that's impressive. To the IRS, it's not impressive.
No, it's a crime.
It's an area where we need to improvement. Koskinen was just in California at a big tax forum, and he was railing about how little money he's getting, and we don't want to get into our saga section, but let's see how fun this is all running in together. Because you're right, he's complaining about not having enough money. Well, of course, they just cut his budget, which thank God somebody's actually trying to enforce some kind of regulations on these people and trying to put them in line. And the only tool that they have to put them in line is the power of the purse. The power of the purse.
And it's
So maybe I can play. Let's play a clip.
The IRS has been targeting American taxpayers, as we've learned, for their political beliefs for the last 4 or 5 years. During this period, a culture of shading the truth was fostered and developed by directors and administrators throughout the IRS. Now this culture within the IRS has grown to one of stonewalling, double talk, and mistrust. It's up to Congress to use the power of the purse, Mr. Chairman, to rein in the IRS and force them to conduct their analysis in an unbiased manner. This is our constitutional tool. The IRS has proven itself to be unable to do so, which is why I'm introducing this amendment that cuts more than $788 million from the IRS budget. With the combined cuts in the underlying bill of $341, this will approximately cut the IRS budget by 10% from its current funding levels. The underlying legislation takes a good step in the right direction, and many of the amendments, including the last one that was just adopted, are a step in the right direction, but I unfortunately believe this doesn't go far enough. We need to keep in mind that the IRS is one of the most feared agencies within the federal government, left, right, or center. They can freeze bank accounts, garnish wages, and seize assets with the flick of a pen. Congress needs to utilize the power of the purse, our constitutional tool and responsibility, I might add, to send the IRS a message to put an end to this newfound, quote-unquote, business as usual.
Amen, brother.
That's right. That's Representative Hoskinen from
Not Hoskinen.
Hoskinen.
Oh,
From Michigan. He's a Michigan representative. Hoskinen. Huh? Whatever.
The guy from Michigan.
I have him right here in front of me. It's a weird spelling. But,
it is a weird spelling.
So we're going to talk a bit more about this on the other side of the break.
Don't go anywhere. We'll be right back.
It's not.